Hi everyone, I'm Sam.
And I'm Jess.
And welcome to the Creative Scale Up video. Fully funded by the Department for Digital, Creative, Media and Sport, the Creative Scale Up program, an exciting new initiative designed to empower creative businesses to realise their full growth potential and gain investment to take their business to the next level. The program is delivered on behalf of the Greater Manchester Combined Authority and the Business Growth Hub in partnership with GC Angels. In every episode, we spotlight a particular subsector of the creative industries and highlight just how lucrative they can be as opportunities for investors, and with the help from excellent panellists from the industry.
Hello again, everyone, and welcome to the second Creative Scale Up video, Invest in Game. Recorded live back in January at the Dalton Street, Manchester WeWork, this episode focuses on investment and the lucrative game industry. Opening with a chance for attendees to network, the event then covered introductions from GC Angels, Business Growth Hub and WeWork Labs before moving on to our panel discussion. As we start our episode, we hear from Johnny Quirk, Community Manager at WeWork in Manchester, who begins by introducing the labs and the role they play in the life and development of early stage startups.
So thank you very much for coming down tonight, everybody. In a nutshell, you're sat right here, right now in WeWork Labs. I guess probably what makes that difference is that we are almost like the pure entity of what WeWork originally was. You know, we're a place for early stage startups to come together, do their best work. We're building a community of early stage businesses here. And we are very, very lucky here in Manchester to actually have a lab because we have 85, maybe 86 now from last week. And this basically is one of the main cities worldwide where we have one. So I think it's a real shot in the arm for the Manchester startup scene. This is one of the first places we've done it worldwide that isn't a capital city. So we are, basically in a nutshell, without your brain melting from this kind of very long description, we're an innovation platform for early stage businesses. What that means is that we provide an incubator accelerator place for all of our businesses to come in and do their very best work every single day. We do run an equity-free startup program here, so each of our businesses literally pays for a normal desk. That's discounted on what you would normally pay for a WeWork desk, mainly because we want to get the very, very best businesses in here who want to grow their companies and give them the best possible start. Worldwide, we run a number of enterprise labs where we run partnerships, especially in the Middle East at the moment. And we also have a number of verticals. So we have just opened a fintech and blockchain lab down in London. We have a prop tech one in Israel and 3 food labs. And what's great about these kind of vertical labs, it means that we can bring all businesses together to collaborate. It means we can bring mentors, investors into that space. It just basically means that all of our businesses can do their best work again around the right people so as they can hopefully really just kind of launch their business in the best possible way. Like I said, we have 86 labs locations now. What this means is that if one of my teams in here, and we have 15 early stage businesses here in our lab, if they basically need a mentorship opportunity, if they need an investor, I can jump on Slack, on Zoom, and basically try and chat with labs managers all around the world to try and get them in front of an investor. So we have really got this very, very strong network effect. And the nice thing about labs is we are very much seen as WeWork's core business. So we are basically keeping growing, and we're really just going to try and take this to more corners of the globe and connect more and more startups in this ecosystem. Just a little bit about kind of the impact we've had. Our businesses have raised over $113 million within our ecosystem so far. We do all sorts of very special events. In fact, I'll be down in London for next week for 3 days. Basically, we're bringing together around about 60 businesses in front of 100 VCs and investors over 2 nights. People raising upwards to about 28 million, but a number of the businesses are actually just raising an SCIS investment round. 2 of the businesses here out of the 7 that are going down to London are raising 1.2 million and $500,000 as well. So that just shows the kind of ambition, although like I said, most are raising SCIS rounds at the moment. We have 400 plus investors in our network right now that are active. We offer our members $450,000 of perks when they sign up. That's all sorts of Google Cloud, Amazon Web Service credits, all the sorts of stuff that you would basically need to get your business off the ground. We provide that software for free as part of our program. And like I said before, we have 2,000 mentors in our network. And if our businesses can't find the right mentor in our network, then we'll go out there and actively stalk people on LinkedIn to try and get them to kind of join us. Okay, so again, I'll rattle through this, but our equity-free startup program gives mentorship, education. We do a number of workshops in this space in our private rooms upstairs. We also do a number of webinars where, basically anybody can kind of listen in and kind of like get connected to those ones in other cities. Investor and capital access is obviously hugely important for early stage businesses. We have labs managers like myself all over the world. You know, my job is to act as a super connector and really just hopefully try and be that extra member on the team. You know, if I'm there having a beer with somebody late at night, or if I'm at a networking event, I hope at the top of my head have everybody's business in my mind and go, oh, you should chat with this guy, you should chat with that guy. Oh, I didn't realize you were raising at the moment. You should chat with these guys, they've just raised investments. If I can actually actively try and act as an extra member on the team, that is what I do. The global community, as I said, is very, very strong. And like I said, the member exclusives that we offer is very, very special. It just means, like I said, that you should basically not have to spend any money on software or hosting from day one. We just want to give all of our startups who join us the best possible start. Okay. Mentorship and industry experts. We try and find the very best experts out there to join our team. Global community. So it's not just us kind of making virtual connections. We basically have a satellite program, which means any of our startups can go and work for up to a month in any of our labs worldwide. So I'm wearing this San Jose t-shirt today. We had a San Jose member here a couple of weeks ago who'd basically joined and came in here for a few days. We have one of our guys who's just been in a different lab in London each week, and he's going to Moscow next week to meet our startups there. We believe, again, that, you know, being able to connect people all over the world is very, very important, and we're not just show, we're not just talk. We want people to get out there, meet the startups, and really feel like they're getting a different experience wherever they go. Investor and capital access, like I said, next week is very, very special. Okay, we might not be able to put 60 to 100 VCs in one room in Manchester and really keep their attention all night for the variety of startups we've currently got. Although, like I said, for somebody who's been involved in startup culture for a long time, Manchester really is booming, which I'm excited to see. But if we can say to our guys, look, we're 2 hours down the road and there's some amazing investors down there, that's the sort of stuff that the extra value we can do from being based here in Manchester as well. So like I said, we really just want to make sure our businesses get the best possible start there. And then we also do so many events every day. Like I said, 50 to 100 events. We are starting to tape a lot more of these. So as they're done on webinars, we just try to really try and be as creative as possible. This comes from doing internal events, whether it's one-to-one mentorships, lunch and learns, workshops, or even doing some of these external events. There's a number of our members here who potentially aren't in this industry, but they're here tonight just to learn and basically find a bit more. You never know where those connections are going to go at networking events as well. Okay, I think I've laboured the member perks a lot, but it's kind of all here, right down here if you want to see. Zendesk is my personal favourite one that basically I think every single startup has used so far, because basically if you can just outsource all of your customer service on Zendesk, it's free, and that's a perk that we offer of $3,000 to Zendesk Premium every year as well. And here's myself here. So, you know, like I said, number one thing is really just for us to be a really strong advocate, just out there in the market every single day, shouting about businesses, trying to find those mentors, trying to support, and really just trying to make sure that our businesses don't run out of cash too early, that they can kind of grow, they can feel very supported and feel they have all the support they have. Each business can set up a one-to-one with myself each week, and also our mentors in-house. That means we can talk about their business goals, their aims. We can find out kind of like what sort of programming they would like going forward. And it means that we're very founder-focused in using that data to work out the programs. There's no point in me constantly running investor events if nobody's raising investment. There's no point in me doing a GDPR drop-in if nobody needs GDPR access. So, you know, we are very, very kind of like member-led in terms of listening to our members. So, as I said, that's exactly what we do. Our labs team's made up of all these amazing people. This is just a small amount of them. It was very fun hanging out with them in Berlin last week, I must say. Just a quick shout out there for WeWork Labs Berlin, which is launching very, very soon. But again, these guys are all quality people who are just very, very outgoing, and also I know will kind of like jump through flames to support their startups every day. And really, just a quick call to action, just to really say, if you know startups who you feel would get extra support and would actually generate excitement from being part of our program, please do connect them with myself. We have an Inside Labs program for businesses who actually want to be here based in the lab with a desk. They want to be around a community of startup founders every day. But we are also just launching a new virtual labs program based on feedback, in that we can offer all of the kind of extra mentorship, the network from afar, but maybe they aren't based in Manchester. Maybe they're already another accelerator. Maybe they just basically don't want to be physically somewhere each day. So we offer both programs. So like I said, if you want to basically send anybody our way, be my guest. And over to Jess. And please do enjoy your evening. There is plenty of beer out there. There is food here. And yeah, have a good time. Cheers.
Seamless. Thanks, Johnny. And wow, aren't they all good looking? Then WeWork lot. That's ridiculous. Just like, whoo! Anyway, Yeah, so I'm going to invite my colleague, who's also good looking, John Moore, to talk to you about the Creative Scale Up program in a little bit more detail. I think I saw some of you there last week. It was a fantastic launch event over at Neo, which is one of Bruntwood's properties, absolutely chocked to the rafters and drastically overcatered. But it was an amazing event, and we learned all about how creative Manchester is, and how this program is really going to help it to skyrocket to new places. So, John, over to you, please.
Thank you. Okay, thanks, Jess. Yeah, not as good looking as I'd like to be, but never mind. We'll draw a veil over that. I just wanted to take a moment or two, just checking that, just to run through the background to this program and why you're here this evening and why this is the first event of this type. Basically, this is a program that the government have set up. It's a pilot program, and it has its origins in what was called the Industrial Strategy Review that was done in 2017, which effectively identified that the UK, it's the future of the UK, wasn't in digging coal out of the ground. That's an old industry. We needed to be doing more in the newer industries. So industries including life sciences, agri-tech, fintech, and indeed the creative industries. And having identified the sectors that would be the sectors that we needed to do more of in the future, they then decided to take further detailed research into a number of these subsectors. And what happened then was they did a report on the creative industries, and that identified two themes that were holding back the creative sector that could do more than it's already doing. So whilst we're very good at it, there are still things that are holding us back. And those two broad themes were, one, businesses in the creative industry sector were not necessarily good at actually explaining themselves to prospective investors. They perhaps didn't use the right language. They didn't necessarily know what information needed to be provided. They're not typically investment ready. And in parallel with that, the other issue that was identified is that outside of London, the investor base isn't as deep and as wide as perhaps it should be. And therefore, we need to develop the investor base in a much deeper way, in a much wider way. So this brought into effect the pilot program, which we're running now in conjunction with two other regions. Greater Manchester was chosen because of its commitment to the creative industry sector. That is partly, to be fair, on the back of the relocation of the BBC and ITV in Media City, which has undoubtedly created a pull. But notwithstanding that, we did have a thriving creative industry sector in this area, but that's definitely helped on that. So, as we've said, there's an investor journey, of which tonight is part of this. So tonight is about, I'm going to use the word educating. I don't mean that because we don't think investors are well educated. It's just that we think there are some subtleties around some of the subsectors that perhaps investors don't always fully understand. And that by having an environment like this and an opportunity like this, it will enable education to be disseminated and people to feel more comfortable. The other thing is then, well, how do we get the businesses investment ready? Because it's all right educating the investor community, but if the businesses aren't presenting themselves effectively, if they're not bringing suitable opportunities, then investors aren't going to invest. So what we do in collaboration with our partners, we have developed a program. So we've got Intellectual Property Office, for example. My colleague here, Ian Sterrett, is from the Intellectual Property Office. We're working with Creative England. These are all people that will have an input into the program and the delivery of it. Also, through the Growth Hub, these businesses that we work with will also have access to a deeper business support mechanism. That's actually unique in the pilot program because the other two regions don't have the depth of support and the breadth of support that businesses have here in Greater Manchester. So this is something that hopefully we can work with these businesses to bring the best possible opportunities to the investor network. So what does this program module look like? So this is very much to let you know what these businesses are going to go through. I don't propose discussing all of those points, but the basic point about this is they are better prepared to face investors, present themselves to investors, and give the right information to investors. And I will focus on one particular point because I think this is important. And it's the understanding and managing intellectual assets, because every business I've visited, because this is my responsibility, this is where I have responsibility moving forward. Every business that I've spoken to has immediately latched onto the intellectual assets part of this program, because when I've spoken to a few people and I've explained it, they've suddenly gone, I didn't realise I've probably got some intellectual assets in my business. I don't know if they're protected and I don't know how to value them. So this is going to be a big, important part of this, and I think that's very key for investors moving forward, to know that intellectual assets have been identified, have been suitably protected, and there is a valuation attached to them. So the bottom line is there's two pieces of work going on. This forms one of them. In parallel, we're going to have a program. We're going to get businesses better prepared to pitch to people such as yourselves, those of you who are investors in the audience. And it's all about enabling creative businesses to be investment ready. So thank you.
Okie dokie. So, I get to talk about stuff I actually quite care about. So, I was talking to one of my chairmen, actually, of GC Angels, and he said, "So you play games? Why do you like games?" And I was like, "Well, it's escapism. I just really enjoy it." And I found that yesterday, and I laughed too hard, so I had to include it in this slide deck. But on a more serious note, this, invest in game, the title of this event, is actually the objective that we hope to achieve through events like this one. We want to see more investments happening in game in Manchester. So we're going to do that through having a fantastic panel today. And someone who actually knows way more about the industry than me is going to talk to you about some key industry trends, some of his experiences as an investor to setting up his own business in the space. So I'd like to invite James Davies up, please. Round of applause, please. I'll do another seamless transition for you.
Great, thanks. Okay, right, well, welcome to WeWorks. I'm the founder of Agon Gaming. I'm the first company in the WeWorks lab here. Started 7 months ago. We aim to help gamers with their number one problem, and that's performance. So we're offering a B2C marketplace of curated content from your kind of leading professional gamers to help the gamers improve their skills in the games they love. Before this, I've been investing in media and entertainment companies for about 15 years. My last role was 8 years at a company called Ibis Capital Partners in London, which is a hedge fund specializing in the kind of TMT entertainment space. Today I'm going to talk a little bit about the video game market dynamics, why I kind of left being an investor and try to start my own business, because there's so many structural tailwinds to the industry, so many ways to play the interest in the space. So hopefully this will be useful and interesting for everyone in this room. So who in the room knows who this guy is? Okay, a couple of hands. Well, if you're a kid or a teenager and you play Fortnite, 100% you know who he is. So on the right, you've got Ronaldo. Pretty much everyone knows who that is. But on the left, you've got Ninja. And it's a little bit disingenuous, but he streamed with a musician called Drake. And a lot of people tuned in to watch him on Twitch play with Drake. But in the gaming circles, he's been known for a very long time. But the point of this slide is to say he has more kind of like social interactions and he's well known in the younger kind of gaming space than Ronaldo. Anyone know who this is? Okay, yeah, good man. So this is this guy called Shroud. He's basically in the same league as Ninja, and he plays lots of first-person shooters. He started in Counter-Strike. He's been on the Twitch platform for many years, and in his streams he said, look, the only reason I would leave Twitch to go to Mixer, which is owned by Microsoft, is for 50 million. He moved in October last year. Does anyone know who this is? Okay. This is Booger. He won the solo Fortnite World Cup. And that's a picture of him there, and that's Flushing Meadows. So on the right there, you've got the US Open, Aussie Open, French Open, and Wimbledon. That's the men's singles prize pool. And that's what he won. So if you think of Djokovic, Federer, and Nadal, he earns the same money as them for the prize pool. This is an empty arena, but on the front there you'll see a team format. It's Counter-Strike. So do people go and watch people play video games? I mean, it's quite alien to think that people watch them on Twitch and Mixer, but do you go to stadiums and arenas for this? Like, Man United, Old Trafford. The answer is yes, people do go and do it. A couple of years ago, I was in Brooklyn at the Barclays Center as a guest of Modern Times, which owned ESL, the biggest independent esports organization in the world, and it was pretty much like this, packed out. So on the left here, we've got Avatar. I think maybe Avengers Endgame might now be slightly higher grossing, but inflation adjusted, maybe not. The reason I put this up is because Avatar is well known to everyone. It did about 3.3 billion global box office. Actually, in a former investment fund, we actually invested in Avatar, so I've got a little link to that as well. But on the right here, I have Grand Theft Auto, and this is the latest iteration. Sorry, it's about 6 years old. 2013, it was released. That's done about $8.5, nearly $9 billion. So it's nearly 3 times as big as the biggest Hollywood movie. This slide, a little bit geeky, but you're investors, so let's go to it. This is basically your EV/EBITDA multiples. And the point here is, in the first arrow, around 2012, you'll start to see a re-rating. Investors are willing to pay more for these gaming publishers. It doesn't really matter, what you're looking at is basically Ubisoft, Activision, and EA, big public listed companies, and so they're on the stock market. But the trend is what's important, and you'll see a re-rating there. And that's because investors are willing to pay more for their earnings, and why? Well, around 2012, games stopped being like single path. DLC and microtransactions came in. And that basically meant that's why Grand Theft Auto is so popular. It's not just about the number of units of sales. It's about creating communities, about creating IP, which people love. And once they're there, they're sticky. So Grand Theft Auto is an open world game. You can keep updating. Think of it like a book. You can add more chapters to it. That was a really important thing for the gaming market there. So it basically meant that it was a less hit-driven nature, and that once you had a hit IP, you could then continue to exploit it. Around here, there's a little bit of a sell-off, and that's because we had Red Dead Redemption 2 released, a very busy release slate. So just before before Christmas, you'll see a lot of big titles come out, and it got very busy. And what it reminded investors what they are still hit-driven. Okay, the market. It's global. It's $150 billion. It's well established. A nice way of thinking about it is 50% mobile, 30% console, 20% PC. There's some slightly different growth rates to that, but overall the market's growing like high single digits, maybe double digits. So this is expectations from one of the investment banks, Citi and Newzoo, which do like analytics in the space. The point of the chart there is it's continuing to grow. That the growth isn't expected to decline. So if we think like high single digits, double digit growth for the market, that's pretty interesting. Not too many markets are doing that around the world. And at the top there, gaming as a service. If you think of Google, there's the new product they've got, Stadia. And why that should be interesting to, I guess, us as investors or people in the industry is that the barriers to entry of playing games is coming down. Traditionally, you needed an expensive console, or if you're a PC gamer, a really expensive rig. Now all the processing is being done in the cloud. And so all you really need is a screen, and it's dumb. There's no processing power there. So the idea is that the barriers to entry come down, and the TAM, the number of people playing, possible to play games, is going to increase. Some graphs there from some of the banks and stuff, just talking about online penetration, different areas where the penetration is quite low, so that's going to be driving that. So the number of gamers is going to increase. 30% of the population are gamers. That's a breakdown there around the world. And also, it's not just the number of gamers coming, it's the time spent. So there's 20% growth there in people actually playing the games. And that's across a different age range as well. So the average age of a game is 34. It's not just a teenager. I myself am 39. My wife hates it, but I play video games. Now it's all purely research, obviously. But This comes from Goldman Sachs and the US government. So basically, video games compete with every form of entertainment, going to the pub, cinema, reading books, whatever you want. And if you actually went to the back of this deck, there's a slide with TV hours and so forth. And it's basically what are you going to spend your free time doing? But it's a structural winner, that's the point. Male, female, slight male skew, but females play just as much as males, basically. That's the point of the slide. And it's global. So there we've got Germany, US, Singapore, and that's the number of hours spent playing video games a week. So you think about 7 hours. It's quite interesting, actually, that the biggest markets, China, US, Japan, South Korea, Germany, and then the UK. It's quite interesting that like South Korea and Japan maybe aren't the markets where there's the most hours played. So it depends, again, where you want to position your company, what your proposition is and so forth. And then esports, big buzzword, but if you think the market's $150 billion, this year it's supposed to break about $1 billion. So it's only a small fraction at the moment, but it's a buzzword and everyone's very excited about it. And then the UK market. Now, there's going to be lots of interesting people on the panel tonight. The great thing about the video game industry is there's many ways to play this thematic trend. So it's not just about production companies, which the UK is amazing at. Okay, Grand Theft Auto is a Rockstar Studios game. It's owned by Take-Two, which are in New York, but Rockstar's here in like the UK. Great history. There's a guy, Ian Livingston. If you look up him, he was at Altrincham Grammar School, and he invented Games Workshop, and he's been invested in the games industry for years. He's a UK guy. You can invest across from language, subtitles. You can invest for data analytics, marketing platforms. There's loads of businesses. So, looking forward to hearing what people on the panel have to say. And then one of the nice things we've got at the moment is tax incentivization. So there's lots of nice benefits there to kind of de-risk the investments. I've got some examples here just to finish off to get people excited. So Twitch, which is the platform I was talking about where you can go and watch people play video games. It started off as just in TV. It started off as a webcast of a guy changing and going to the toilet, eating his breakfast and stuff like that, right? Basically made no money. And actually there's some, they're partners now at Y Combinator. But one of the guys was involved in this, and then he realized that watching people play games was important. It got his own department. And then around 2014, Google was supposed to be buying Twitch for $1 billion. Amazon jumped in there. And now, Amazon don't break it out in their public disclosures, but it's supposed to be around $4 billion. Probably a bit more, but it's all guesswork, basically. Now, CD Projekt Red, these are the kind of graphs investors like to see. This is my predictions for Agon Gaming as well, by the way. One of the reasons it's so crazy is, yes, there's The Witcher, which you see on Netflix. These guys actually started out bootlegging IP. They're actually pirates in the car park in Poland. And they actually managed to bundle pirated copies of computer games with maps and signed copies and actual hard physical assets which people could buy. And it's quite funny now they own a publishing company. But The Witcher has been one part of that story, but the main reason is Cyberpunk. And if you haven't heard of this game, check it out. The hype is crazy. It's supposed to be the Grand Theft Auto killer. And the market, in some people's opinion, in the market, investors have gone crazy for it. But it shows the potential here for certain investments. And then particularly for businesses like my own and for other people which aren't listed and so forth, there's many exits here. So we've just seen how Amazon and Google are interested in Twitch. We've seen people like Nielsen buy super data. There's lots of strategic buyers, lots of exit opportunities. But this basically says, look, if you're looking to invest in the stock market, there's too much liquidity around. You're not getting returns. The private market's the where to look. So yeah. Got great market in Manchester, great businesses around in the UK. Yeah, come and invest in companies like ours. And that's it from me, okay?
Great. Thanks very much, James. I'd like to now invite my panel to come up. Yeah. So thanks very much for coming and spending your evening with us. So I guess just to start off, and a bit of a caveat, I play games. Don't know how the industry fits together, so license to ask the stupid questions falls to me. And if anyone does have any questions at any point during the discussion, raise your hand, and I'll pass the mic over, and you can get a chance to ask these guys questions. So starting with you, Simon, can you just give a really quick overview of who you are and how you kind of fit into the ecosystem really quickly?
Okay, so my name's Simon Smith. I've worked in the games industry for 20 years. Started at Codemasters and worked at Blitz Games and Sony and a couple of other places. I now have my own independent production company called Thumb Food. We just recently did a game that was funded by Sony PlayStation. We say Sony PlayStation interchangeably in this conversation. It's probably a good tip for everyone. It's basically the same thing. And I also do lots of extra stuff like women in games and that sort of stuff. And I run Gameopolis, which is our networking group. There's the logo for the Greater Manchester game developers.
Thank you. Andrew?
Hi, I'm Andrew Benison. I run Prospect Games. It's a games label based over in Eccles. We've been making games for about 5 years now across PC, consoles, mobile, and we're kind of multi-armed business, so we do things both original IP development, outsourcing. We've been experimenting a lot with co-development with partners around Manchester in the UK, and we're just trying to find a better way to make games.
Thank you. Stephen?
I have been in games since 1993. So a long time, too long. But I love games. My background is marketing, PR. I was working at an EA studio, which was up in Macclesfield. It's not there anymore. 3 years ago, they closed it down, so I was made redundant. And I'm not bitter. I've not bought any of their stuff.
EA is where games go to die, so it's okay.
Yeah, exactly. And now what I do is I'm a freelance marketer, basically. So I work with video games companies, indie devs, a lot of them up here, a lot of them around Europe. I also work with organisations like NI Screen and Teesside and Princess Trust doing mentoring for young companies usually. I'm bringing them kind of up to scratch and giving them a commercial and marketing event, and then also work with merge games as well. And my job for merge games is going out and finding games which are fun to play. Easiest job in the world. It's brilliant. I always suspected it was when I was at EA, looking at those people who did scouting for games, and now I know it is. It's not bad.
Daniel?
So I'm a bit of a noob compared to something else. I've only been in the industry about 10 years, and so I was, until recently, Chief Operating Officer at UKIE, the games trade body, still Strategic Projects Director there. I'm also wearing a Creative England hat, who are launching a new debt finance fund, so providing loans to games businesses, just trying to figure out how that fits into the games sector. And for the last 3 years or so, I've also been an angel investor in games businesses, so hopefully I'll get some insight into my sort of steep learning curve in that space as well.
And finally, but not leastly, Nick?
Hi, and thanks for having me along. I jumped in yesterday, I think, invited myself on the panel. I work for Merge Games, which is a privately owned software publisher based out of Knutsford. We are now in our 10th year, 14 staff, with a turnover of just shy of 10 million quid a year. We publish on PC and consoles. We're looking into that new murky market of the streaming services. We're sort of trying to get into that, and I'm going to trump all of these guys on the panel. I started in 1985, so I've been in it for 35 years.
So I think you've heard there that there's games developers, games production businesses, investors, trade bodies. But I guess if you're kind of new to that, a good place to start would be how that kind of all fits together, the success stories, indies versus mainstream. So mainstream versus indies, Andrew, I know we had a chat about this. Can you sort of give a bit of an overview as to sort of the breadth of that, of the two definitions of those two terms, and broadly what that means in this context?
Yeah, absolutely. So, so your mainstream big scale developers, sort of your EAs and Ubisofts, and they often have networks of smaller sort of subsidiary companies made up of 100-man teams, across multiple locations. For example, we have Ubisoft have multiple locations just in this country and in France and Canada. So that's kind of the big picture stuff. Those are the people making your Destinies, FIFAs, etc. And then you have on the other end of the spectrum, indie developers, and that's essentially, it can be literally one person just in their bedroom coding. Like that's literally the definition, like the core definition of an indie. And you'll find a lot of teams will sort of grow out from that and be sort of, for example, Prospect, we kind of started in a kitchen. That was our office for the first 6 to 8 months before we started transitioning into being a proper business. So, and between that, there is a huge, scale of different sizes of companies of all sorts, all with different levels of ambitions as well. You'll find the indies are a lot more kind of rock and roll about things. Yeah.
And Simon, so developers and publishers / any others, can you give a bit of an overview of what the key difference is between those two entities or other entities that kind of fit into that picture of getting a game from being made to out there?
Yeah, I mean, just a bit on the terminology. If a developer is a company that just makes a game, like the production company in a TV sense or a film sense, and then the publisher is the person that does the sales, the people that do the sales and marketing. Maybe they fund the game, maybe they do more of the business side of it. So if you're comparing it to something like the film industry, it should probably be a good, more easy comparison for people to make. So a publisher in the games industry is equivalent to someone like Warner Brothers or Disney or 20th Century Fox, and they may or may not own the IP, because if you're a creative, you go to that company and you might retain ownership of the IP, or you may not. It depends sort of how powerful you are. Obviously, if Steven Spielberg goes and finds funding, there's a good chance he'll retain ownership. But if
But you probably want that brand stuck on it anyway.
Right?
But
if Joe or Josephine blogs on the street goes and pitches something and manages to get a deal, then they won't own the IP, and that's really important in the games industry because that happens quite a lot. Traditionally, it's happened quite a lot. It's got a lot better recently. As an aside, people are tending to own their IP more, and companies like Merge make a lot of noise about people retaining their IP. Depends obviously if you're funding it or not, doesn't it? It always comes down to that. Absolutely. But it's there's always a deal there. So yeah, it's a mixture of that.
Great. And Stephen, as a freelancer, so obviously the freelance world has a lot to play in this when you sort of bringing in different skill sets, different animators and all of that kind of thing. So how does sort of the freelance world fit around that?
I'm trying to work that out, Jess. It's a creative business, the development end, it's a creative business. So what I think certainly I'm finding in the Northeast and to a certain extent in Manchester and in Northern Ireland as well, is that companies can kind of scale up and scale down when they're developing a game, and they can access different kinds of freelancers if they need graphics or they need coders. These people are available. It's a very kind of flexible ecosystem out there, I think, for indie devs. The good thing that we have here in the Northwest is that we've got loads of talent. We've got really a lot of talent in terms of we've got good schools pumping out talent. We've got a legacy from companies like Ocean Software. We've still got big clusters of developers out there in companies like TT Games. In Wilmslow, and others around who will often leave and then start their own companies as well. So from a freelance point of view, it's a real benefit to have that in this world when you're creating stuff. We have less publishing up here. We're very focused on development. So Merge, it's very rare that there's a company like Merge. Yeah. So, and it's very rare that there's a company like Merge outside of London. So at least we have one.
Yeah.
Well, there's more than one there. I was going to say on the freelance stuff as well, so to interrupt, but it's finally become a position now, hasn't it, where the games industry has got into a position where we can have a freelance environment, which we've been talking about. Everyone's nodding their heads, but I've been talking about this for my entire career, that because in the games industry can be very boom and bust. Mm-hmm. So companies will hire loads of people to make a game. They know they're making this game for 2 years. They'll hire loads of people and go, yeah, you've got a job for life. Come and make this game. Happens in the industry all the time. Come and make this game. We'll employ you full time. And then after 2 years, when the project's finished and there's no direct sequel, they'll just make half of them redundant. And that's
even if it's a success.
Well, yeah.
You're about to make a lot of money.
Activision literally just did this, didn't they? They made 1,000 people redundant worldwide, and they make Call of Duty. But I'm agreeing with everything you say, obviously, but you just said. But yeah, we're now in more of a position in the games industry, particularly in Manchester, where we've got this sort of freelance culture developed, which I think is brilliant because people can jump between companies. So rather than just hiring people and then making them redundant. So Andrew, for example, he could hire people, or his company can go and do a bit of a work on a different game, or you work across lots of different projects and stuff like that. So it's more like the film industry has been for the last 100 years, and what a lot of people in here I think will understand is the tech industry. So I've worked a little bit in the tech industry in Manchester, and you have people that will just work on this website project for 3 months. So they'll go and work for Auto Trader for 3 months, and then they'll be fighting off offers to go and work for another company. And that's what we're starting to get now in the games industry.
I think, as sort of Stephen was saying, with an industry that is driven by creativity, having that ability to draw on skill sets that you need as and when you need them is very typical in this space, and actually is a strength. So I think that's a really good point. So sort of moving into then, and this was something that is certainly new to me, traditionally how games are funded. So this was something that we talked about on our Skype prep call, and sort of it's not traditional. So I use the word traditionally in a strange sort of quote marks there. But I mean, Daniel's probably best to start with you on this one. Sort of with the sort of the breadth of investment opportunities that games sort of represent, from, you know, all these different journeys that we've talked about, or these huge exits and early stage indies. So can you tell us sort of through some of the typical ways that maybe the earlier stage companies get their projects off the ground? I think project is a word we kept coming back to.
Yeah, sure. And you mentioned the word breadth of opportunity. There is a huge breadth of opportunity. And I think the question is actually, what games businesses want the investment for, and then conversely, what they're prepared to give up for that. So, you've got the top level, you've got big IPOs where they're obviously such a big institutional investors and all the opportunity that is. You've got really well-established UK businesses like Jagex, for example, who got big overseas investment, inward investment from China. You've got other companies like that who want to get market access to the Chinese markets. They get Chinese investment, and along comes that comes kind of Chinese money as well. So you've got publishers. There's been a lot of publishers raising a lot of money. So publishers are, I guess, slightly less risky because they've got a diverse portfolio in place, and not just all eggs in one basket, but nonetheless, so they want investment for to diversify their portfolio and get more games to market. And then you go down through the gears, I guess, more and more. So you get a lot of businesses who are thinking about in terms of offering equity stakes. They want money to get their product to market. They're looking at software as a service, sustainable business models, and so on. And then all the way down to sort of where I guess I've been operating to startups, smaller businesses who, it's quite difficult in some cases to differentiate the business from the game. They want the money to make a game, and they're not thinking about market valuations and what exits and stuff like that. They want money to make a game, and they're thinking about the sales they can generate from that game. And in all those cases, a lot of opportunities. I think in that lower tier, there are so many brilliant creative teams making amazing products. But I think for investors to sort of understand that's where I think there's a bit of knowledge required to, someone's offering to build you the next fortnight. Do you know whether actually the world needs another fortnight? Probably not. But and also how do they got the quality team to do it? Are you happy to take a rev share deal rather than a stake in equity, for example, things like that? So at that lower level, kind of, you will be, a lot of teams are not focused on, or not even willing to give over an equity share. They might be looking for a publishing deal, but again, how does that fit in with a bigger investment picture? So, there's a lot of opportunity, and I think you just need to understand how the differences of what people want for their business, and therefore what they're prepared to give is.
So Nick, one of the things we'd sort of talked about over email in prep for this was sort of it's projects that need funding, not necessarily the company. And obviously, as a publisher, that's kind of what you do day in and day out. So you talk us through a little bit about that.
So we're just one of the options that's out there for development teams to consider when they're looking for funding, and it might not always be the best answer for a team. At Merge in particular, we try and see ourselves as a plug-in to the developer's business, helping them with all that sort of stuff. I think somebody here mentioned it. It's the business side of stuff, the sales, the marketing, the communities, working with the platform holders and getting your game noticed, which is the key thing. It's all very well having a game, and you can create the most fantastic games the imagination can think of, but unless you're getting it out there and getting people to hear about it, it'll just be a best kept secret. So We actually have many games pitched to us, and then we've got Stephen out and about looking under stones for titles that we might want to publish. That's the first thing. As a publisher, we want to publish them. When we find a title, then we get in contact with the developer, or they've come to us, and we start negotiating on how we might work together. Now, sometimes the developer might not want to give up rights and thinks they can do it all on their own, and that's fine. Generally, we don't want an IP. Again, it was alluded to here. If you want us to fund all of your game for 2 years worth of development and we're going to invest £2 million into it, or whatever it might be, then we'll probably want the IP. But ideally, I would recommend developers and certainly investors in developers to hold on to their IPs because they can exploit it further down the line. You're only generally as good as your last game. And we look to, obviously, we can fund games. We've got a gut feeling and we've got a spreadsheet that we type numbers into, and it spits out whether or not we think how much we will invest in a particular title.
Sure.
But then we revenue share on what we invest, and we recoup out first. So once a game is launched, and the developers are clear on what costings we will recoup first before they actually start to make any money. So it can be that you create a game and for the first month or two actually don't see any return on it at all because you're actually paying back that money that you've borrowed, as it were, from the publisher. But the publisher then is also opening up more channels, more markets. We do digital and physical goods now, so we've got games in boxes in stores all over the world as well. So you pay your money and you take your chances.
So publishing is kind of one route, and I know we were sort of chatting about public sector instruments together on the Skype call, and we'll come back to Creative England in a second. But Simon, we had a chat about what was the name of the for the UK Games Fund, and that had sort of been set up by the government, and we sort of were talking about how it was almost a shame that it wasn't able to do the good that it could do. So you just sort of talk a little bit about that fund and.
Yeah, I mean, I think the idea of the UK Games Fund is brilliant, and it's something that this is the second iteration of this sort of fund. We had a similar thing a few years ago, and that helped some companies, for example, Hutch, who have become really successful companies. They're a mobile games company. That's a really good example. But the UK Games Fund doesn't have a very large pool of money to dole out to people.
So it's supposed to be about 10k-ish in grant, wasn't it? Or
it's changed a few times. Originally it was 25k, and the idea and you could possibly get 50k if it was the right project.
Yeah, went up there were a few cases of 75, but around that mark, but 50 is about the.
Yeah, and the way it's been, the way it was originally, it's evolved, hasn't it, over the past few years. These guys know a lot about it as well. It's evolved over a few years, and it was originally designed as to help you prototype, and very quickly a lot of indie development, and it was 25k originally, wasn't it, to prototype your game? So you could get to a prototype and then take it to someone like Nick and say, I've got this little prototype of this game, what do you think of it? So to stimulate games, very quickly it became people were just trying to make that 25k the budget for the game, or part of the budget of the game. That happened very quickly.
Developers are very good at stretching out what level they can get and making the most of it.
My next comment was 25k is not very much money.
No.
Yeah.
It's like maybe one programmer for 2 months if you're being really serious about it, and paying people properly and paying for an office and stuff like that. So it's a tiny amount of money, and it's perpetuating a lot of small games, a lot of prototypes. And what we really need, we all need to support the UK Games Fund and campaign for it because it's got a good mechanism, it's got a good system, it's very well thought of, the way that it works with people. And I think if we all campaign and get behind it and campaign for the government to give it more money. Because it's
we'll send around a petition later, everybody.
The budget's tiny, really, isn't it? It's like they've got like 1.5 million over two years or something, and like every Quango, to use the word, it's terrified every 2 years of where the rest of the money is going to come from. And every organisation that whether it's the BBC or Creative England or UK Games Fund, every couple of years they're terrified as to where the next lot of money comes from.
Can attest that's exactly the same with every public sector fund. Exactly.
We're here we're a growth company as well. And that, I think that affects the way that business is done and the way that people invest. And people
it creates a momentum, but it's just a
people have always
shame
got
that
in the back of their mind. So the real issue, I think, with something like the UK Games Fund is I personally don't think they have enough money to be able to make a really significant impact on the UK games industry, because we don't. So we've got the UK Games Fund doing 20, 50k, and then they're doing this transfuser system, which is for students, so they can get like 5k, which for students is like brilliant. That's a lot of McDonald's. But in actual making a game, it's not very much.
We have these criteria like job protection and whatnot. And
there's a lot of caveats.
Kind of hard to, there's a lot of hoops to jump through. So you
comes with the public money, doesn't it? It's always
absolutely.
But so for me, it's and most of the, like Andrew's size company, and most of us, it's not worth the bother. It's a lot of effort, and then it gets doled out in very small chunks, all this kind of stuff. And the big problem that we have in this country is the funding gap between that small UK Games Fund, 25, 50k, maybe 75k, I hadn't heard of anyone getting that, but that's brilliant. The gap between that and spending enough money to make a project that is viable and can be sold and can have marketing money spent on it, that someone like a publisher is going to want to bother with. And that all ties in with the fact that, and everyone will, all the investors will understand this, that the sooner you go to a publisher or someone to try and get money out of them, the worse deal you're going to get. And actually, the less likely they are to sign you, because someone like a publisher's got to take a massive leap of faith to fund you with a very small amount of investment already in your game. You guys know all about this, don't you? So if someone comes to you with a little game that they've spent 25k on, you can't make necessarily something that's impressive enough for you guys. So if you've spent 25k on a prototype and you're going to Nick and saying, I want $500,000 to make this game, first of all, Nick's going to go, well, you've got this tiny little prototype for 25k, I'm not sure that that's the game. And also, are you a company that can handle 500k?
You need that due diligence to make sure they can make the game as well.
So there's this big gap between very small amounts of government funding and what we need to be able to invest to make a decent game that Nick can go, I'm going to make this big enough to make a lot of money out of.
This is why I think stuff like this is good, because when you're developing a game, it's kind of, especially as this is true to all startups, it's hook or by crook. Like wherever you can get the money from, you're going to try raise money. So even smaller pots of cash are not that bad, so long as it fits into a wider set of opportunities. I mean, in the past 5 years, I've done starting the business with my own cash, friends and family, commercial loan, publishing deals, co-development deals, worked with Merge to get Unbox over onto Xbox, PlayStation and Switch, grants. That's just within a 5-year period, and now we're on the Creative Scale-Up program to start getting us towards the path of investment. And every step of the way, it was always right on the line. It was never quite enough, but just enough to keep going. We had to be very inventive with how we spent the money. But a lot of that was because I was going to a tremendous amount of events and meeting a tremendous amount of people. And I was able to keep the company going because I was always able to find the next opportunity. A lot of people don't have that, and especially in the Manchester scene, you've got a tremendous amount of developers from those bedroom devs all the way up to the game, Star Citizen and the Lego games are all being made around the corner. So you've got all this stuff going on in the region, and if there was just a bit more interconnectivity between not just the developers and publishers, but the wider investment world, public funding, all this kind of, we've talked about getting a Manchester booth out at Gamescom maybe with UKIE this year, because why not? Because we've got all this stuff happening in the region, and yet if you asked most people in the local boroughs, where are the TT games, where are the Lego games made, they wouldn't know it was round the corner. So I'm fine with maybe certain pots not being as large as we'd like them to be. Obviously, more money's great, but more connectivity and communication between all these people and events like this can help kind of smooth over those gaps.
Well, I'm going to come back to you in a second on interfacing with the investment community, because I know we had a chat about that. But just to you, sort of Daniel, with a Creative England hat, I think their products were debt driven. Am I right
Yeah,
in
the
that?
new
Can
one
you talk
is-
a little bit about that instrument
Yeah, I
and
was
how
gonna
that
just
helps to
start actually, because there is more money coming into the sector. It doesn't feel like, I guess, sometimes 'cause it's so out of reach for a lot of people. So there's new funds arriving. So I mentioned Ian Livingston earlier. He set up a new capital fund. There's sort of existing entities like LVP, London Venture Partners, and so on. And then Creative England have actually, what's interesting about the fund that we've now got, it's 25 million debt fund, but it's in partnership with a private bank. So again, it's more private money coming in partnership with public money. Different model. It's debt funding. So does that, I think, fits better with businesses who aren't necessarily ready to take the plunge with a publisher yet, or may decide to go down another route, or it can coexist to the next sort of VC money as well. The other thing I want to mention is the tax relief in terms of investors. It was mentioned earlier. The tax relief for video games in this country is brilliant, and as an investor, it kind of underwrites 20% of your investment potentially. Or sorry, you get, for every game, if you get tax relief, you get 20% of your production budget back, and that can be used to underwrite kind of investment opportunities. It's a really big incentive for games businesses and for investment community to use, and I think that is, in terms of government help, it's not cash is exactly what it kind of is, but it does really help in terms of public support.
I mean, we did the R&D stuff.
R&D,
We started on that, and there was a point where it was like, oh no, how are we going to keep the company going? And then 50k comes in from R&D, and the video game tax relief is way better terms. You can claim on a lot more things. But again, there's always been this kind of problem of convincing devs to do it, not because they can't see the advantages, but it's when you get to say like the BFI certificate portal, and there's 55 pages of horrendous stuff you've got to fill out. But
I spent 5 years trying to convince
flashbacks.
developers to do it. I've been through it myself for the first time, filling in that form, and it is quite painful. But as you say, at the end of it, you just got to keep your mind on there's cash at the end of that sort of painful rainbow. If that's
you have to adult occasionally, don't we?
Just to explain that a little bit more, people might know about this already, but we get the games industry in the UK gets the same tax credits as the film and TV industry. So it's 20% tax credits. It's obviously more to it than that, but it's best to look into it afterwards. But it's a great incentive and R&D tax credits. So if you're investing in a TV company, for example, they can't necessarily get R&D tax credits because they're not necessarily tech R&D influence. So while the game industry is a creative industry, not a tech industry, we use and develop technology, which means we get 2 bites at R&D tax credits and games industry tax credits.
Interesting with the film model, with the film model, the tax relief has become an integral part of the funding model within film. It's used it's traded as part of the kind of exchange in any kind of financing. So it does happen in games, but I think there's more there that the outside investment community can look at as a kind of, to de-risk some of the investments as well.
Yeah, because we've got things like Sugar has just launched, a lot of advanced financing based on what kind of tax credits you can get back.
Absolutely, yeah.
We're developing it's called factoring, isn't it? Factoring, is it called factoring where they're using the
credit to get to underwrite it,
Yeah,
exactly.
So the film and TV people, a lot of them have been jumping into the games industry. Yeah. So they're always badgering us.
Goldfinch and all that.
Yeah, they're always badgering us about it, and we're like, because it's a murky, can be a murky world. To put it politely.
Well, and again, mentorship can help. It's another reason I joined the Scale Up program is not just to be told here's how to do things, but to have people who are actually going to invest some time and energy into. And I've already had many LinkedIn conversations and whatnot, kind of starting to guide me down that path. And so that helps if something is scary, but it's objectively a good thing to do. Yeah. You might just need someone to help guide you through that process a little bit.
And from an investor point of view, everything that you've been saying, like, oh, I've got this, I've got that, I've got this, I've got these different sources of funding, it's probably been a complete ball ache for you on that journey. But actually, from an investor point of view, it's like, oh, that's great, because he's actually sort of de-risked it from my perspective, because you've got yourself to the place where you are with grit and hard work. And
Stephen mentioned like kind of proving yourself as well, like that, and that's so important. It's never been easier to download a game engine, throw some assets together, and produce something that looks almost double AAA. And there's been plenty of disaster stories on platforms like Kickstarter where people put something together. It looks like it's made by a team of 200. It's made by 3 guys in Slovakia, and then they raise a load of money and then run off. And so it's about figuring out
credibility.
It's so the people who are investing, you need to know who are the team, what are their motivations, do they have an office space, do they have dev kits, can anybody else in the industry vouch for them? This is the kind of stuff that a lot of startups, games developers don't do, and so they end up getting signed up into horrible publishing deals and whatnot, or working with the wrong people. So again, from an investment standpoint, coming from the outside in, it's just about connecting more with people who can vouch for others. Can say, yeah, those guys did the hard yards. They had a terrible time shipping that game, but they shipped it. They can do it again, but better. So yeah, it's just about increasing, as I keep saying, communication. Yeah.
It's a good point. So I guess what I had sort of next to sort of talk about is probably more on a traditional equity note, but sort of unlocking rounds of investment and who will play critical parts in that. So Daniel, you are an investor in projects. I mean, how is sort of your participation as someone who, as an industry expert who kind of knows that space, like how has that really played an important role in seeing projects get over the line or not, as the case may be?
Well, absolutely. I mean, in any investment, you want to have confidence. You get confidence that comes from seeing other people either jumping in themselves or interested in it. So an angel level all the way up to any other kind of level as well. I think the games industry can be a bit play things quite close to its chest to a certain extent. I'm not sure it does enough to kind of enable that kind of, you know, deal sharing, collaboration, so on, an angel level and a higher level as well. I think there's more we can do internally to shape better deals. So Creative England, we're looking at how we can partner potentially with publishers or with new funds to co-invest in stuff from the outset. And again, maybe that's the advantage of being kind of a publicly funded fund with a private element. You've got a bit more flexibility to do that. I think we need to, you know, that whole sense about having a confidence to invest in something you're not necessarily that clear on in the games industry. So the games industry needs to do more to reach out to the investment community like this, but in more detail to say, this looks like a good deal, that doesn't look like a good deal. I'm not sure that's necessarily what existing investment businesses will do, because they want to keep their own deals. But I think there's a role for, whether that's Creative England or UKIE or someone, just to help give confidence to investors from outside the sector that you know, this team is good, or yes, that game is a bit special, or those numbers do stack up because we know the market and stuff like that. So yeah, absolutely.
Yeah, so it's having that sort of sector expertise to say, I've looked at this opportunity, I know my stuff. Yeah. This actually is pretty good, and regardless of sector, we see that happening. Yeah. Where it's really crucial to have the people who know and are willing to stick their head over the parapet and support deals. So we've kind of talked a lot, threaded throughout this panel, about intellectual property and how important that is for value in your business and actually protecting what you own and what your publisher owns, etc. So I'm actually going to pass the mic over to the lovely Ian on my right. So I know Andrew's sort of mentioned the Creative Scale-Up Programme a few times, which is great, and I haven't paid him or anything. And Ian is going to be running some workshops on IP with all of the businesses that come through the programme. So he's definitely better qualified than I am to handle this element of the discussion. So I'm just going to pass this to you, Ian.
Thanks, Jess. So just to settle you all down to start with, I'm not a lawyer. My background is actually techie development and investing in startup businesses, and then understanding what role IP actually has whenever you're trying to sell yourself. So some of the questions I want to sort of ask some of the guys in the panel is, you know, when you're negotiating to get money, how important is it that you're actually clear about what it is that you're selling, and what is the role of IP in actually making that pitch? So, Simon, you mentioned IP at some stage, and maybe
we're all involved with it.
Can you give me a definition as to what IP means in this sector itself? Because it's used to mean the phrase is used to mean different things in different contexts.
Yeah, so I would again remind people that we're not a tech industry. We're a creative industry that uses technology and creates technology. So I think that gives us advantages, though, because if we're a film company or a TV company, yeah, we can copyright the script and stuff, but we can't necessarily copyright any technical stuff, and there's not many patents you can get out of making a TV series. But you can, and the same with as we mentioned about the R&D tax credits. So the IP that you're creating with technical stuff, you know, technology, code stuff, you can protect that. And then you can protect some of the creative stuff as well. Mm-hmm. There's quite a lot of patents in the games industry that have been going for like 40 years, like all sorts of random ones that you have to be careful of. There's a lot of sort of urban myths flying around as well, isn't there?
Loading screens and ghosts.
There's all sorts of stuff. Well, Ghost Cars is a real one. The Kudos system from Project Gotham Racing is a real one. So like things like, so not just like technical coding things or things, but actual gameplay things, people have copyrighted them.
Okay.
So you have to be careful of that, which is quite interesting. And then, yeah, just from an IP point of view, I mean, my last game was funded by Sony, but I owned everything. I just had an exclusivity period with it. And there wasn't any technical stuff that we could protect, but it was all the gameplay and creative stuff.
So we tend to use the word IP in a technical sort of sense to mean these things like patents, etc. Do you guys see that copyright falls into this classification of what we mean by IP as well? And how important is copyright in terms of owning the content that you may be actually then negotiating funds for?
Well, I mean, my real experience is working with a developer and discussions with a publisher. So, yeah, there's an instant reluctance from the developer to be like, I'm not giving rid of, I'm holding on to this is mine. But actually, when you sort of play it out in 3 years' time and every bit of value is squeezed out of it, there's no sequel in it, and maybe it's an option to actually think about, you can use that as a really strong bargaining tool to get more money. A copyright is, of course, a central part of what the industry does, and from IP infringement and so on. I mean that's still fairly big in a digital sense about people doing that. So yeah, I mean IP underpins everything you're trying to.
Is it well enough understood in this sort of context, though, both by investors and also some of the production companies, some of the developers? Do people actually understand what this is actually?
I think certainly with some of the smaller indie developers that we come across, and especially the ones which are quite young, it's their first game. They don't really know, well, sometimes they don't really know what they're making, but often they don't really know the value in the IP. And I think I said to you that they either don't know it, or they massively overvalue it and think that this is going to be, the next kind of big movie franchise. So you talk them down a little bit and kind of make the game first, and then we'll talk about it. But often they're not making any kind of they're not taking any precautions about how we should protect our property. They very often kind of will rush into signing deals with publishers.
First one that comes along.
Without really understanding everything that's in there. And I was saying, and Sean Nick's the same, if anyone's signing the deal, get it looked at, get it read by somebody.
Absolutely, yeah. There's still loads of nightmare stories about that happening. Yeah. But but it's difficult. I think it's a difficult subject to grasp. And I think when you sort of think about using IP in your valuation, the IP and you and the game are all kind of the same thing to a certain extent. And I think that's really difficult to put a value on. Certainly for a small startup, they want to make the game. You know what I mean? Trying to calculate what the value of the IP is quite good. It's kind of, is that the sales you're going to generate over 5 years? Yeah, it's really difficult to do. So, yeah.
I wanted to add as well that one of the great things about video games is that it's always changing, and so it's equal part opportunity and risk for investment. But when it comes to things like IP and copyright, these problems go all the way up to the top, where it's nebulous what somebody might actually own, because things are always changing. And how do you define ownership when you're, say, modding a game, which is how Prospect started? Nintendo is known to be very, very heavy-handed with takedown notices on YouTube for content which features their games, but arguably falls within the whole DMCA rule set. So it's because the industry is always changing, because there's always new ways to access games. I mean, as was mentioned before, Twitch didn't exist a couple of years ago, and now it does, and that's a new way to deliver content. But that's somebody's content, and it's ill-defined who actually owns it, and there's lots of legal battles going on right now. So at all levels, I think it's impossible to be 100% knowledgeable about this stuff, because it's in flux.
And that discussion in esports, where the IP controls esports, all that kind of stuff. So yeah, absolutely, it's a big issue.
So if it's so confusing, how can some of the investors that don't know this industry, how can they have confidence that confusion is understood by the companies that they're trying to invest in?
Go with companies that are more on the risk-averse side, that go 5 steps beyond what anybody else would do to protect themselves. basically, because oftentimes those layers of protection might fail you, so have as many as possible. We actually mentioned this before. I had a product that was initially prototyped by a member of staff in his free time, and we loved it, and we wanted to develop it, and he wanted to develop it. This is years ago. So yeah, as you were saying, it's not $1 million idea yet. It's not even really an idea. It was just kind of boxes moving around, sort of thing. And he said, let's make it. And I went, okay, great. We're going to have to get IP transfer in place. We're going to have documentation, sign everything. He went, why? I work for your company. Let's just make it. And I had to explain one day things might change. Like, it might make millions, and you might want a piece of that. And that's something that's going to be a problem for the company. And so we got everything signed and structured, and then he did move on from the company while we were developing the product. And it's like, thank God we got that in place, because if that thing then goes on to make loads of cash, I've now got someone completely out in the sticks who could maybe lay claim to the whole thing. So yeah, go for people who are doing that kind of stuff, who are very, very cautious, because...
So we can all be friends whenever there's no money involved. As soon as there's money involved,
yeah.
then suddenly it's down to the who's dotted what I's and who's crossed what T's.
Yeah, but that's an interesting example with Andrew, who either your niceness or your lack of experience, one of those two things, has meant that because most bigger developers have a contract with their employees that says that anything that they do, even if it's in their own time, is at least first look with
the
customers.
I had that. So this is what I'm saying.
But that's what I'm saying. Is it like you're nice to these people? Well, why did you have to sign a contract with them, an extra contract with
Because I've had IP issues in the past, and I had IP issues after that with people working with us who decided to change the deal and maybe not work on the project anymore, and code and content was now in question. And so at the end of the day, a lot of the times, especially if you're dealing with a bigger entity, and this is true to any industry, if they decide they're going to do things differently, what is on the paper doesn't really matter if they've got, say, more money or power or could outlast you in some way. So I had a contract that said everything that you do is ours. I still got all that stuff in place because I don't know what's coming next. You never know what's down the track. And again, because games is always changing, because we have laws coming in, even things like GDPR affected games development massively. You don't know what's coming next, and so just be super, super cautious.
Okay. Right. Well, basically, I think the message that comes from that is, if you're looking to invest in this sort of sector, be investing in folks that are actually thinking about how they're producing content, who's producing the content, who owns that content, and how that becomes the basis of some of the deal negotiations that you're trying to go through. Yeah. Jess.
So I think what I'm going to do now, because we've hit on a lot of points there, and it was an absolutely fantastic panel, so thanks everybody for tonight. So, we've talked about what are the many opportunities that there are in the sector, what some of the pitfalls might be, how we can overcome them, best practice, etc. So I guess just to round off the panel, if you can each finish, I guess, with the main snippet or takeaway that you would like people to leave this room and have in their mind, the only thing that they would have in their head when they leave, what would it be for you, Simon?
Can I say two things, one for my company and one for Gameopolis?
Sure.
So,
why not?
Because I haven't really said anything about Gameopolis, but just quickly, Manchester is basically the biggest area, Greater Manchester is the biggest area of game development outside of London. And London's only really become a big area of game development since the rise of mobile from sort of 2008 onwards. So there's a lot of opportunities around Manchester. We've got TT Games, Wilmslow, Knutsford, over 850 people. And they're a good example as well because they just recently bought Playdemic. Paul couldn't make it tonight, I don't think he's here because he's ill. But Paul's a serial entrepreneur in the games industry, Paul Gouge. He's sold 3 companies. He just sold Playdemic for, I think, quite a lot of money, but I don't think it's been announced. Has it been announced how much? Do we know? Millions. Well, it's his third one. It's his third one, so he just sold it to TT Games in 2017. So there's a lot of stuff happening around Manchester. We've got the Sony VR studio that's not secret anymore in Media City. It was the secret VR studio. 30 people working for Sony on the above the landing in Media City. Obviously all the people here. Well, yeah, I was going to say so, and that ties in with my other point, which was if you want to invest if you're interested in investing, there's some great opportunities to invest in publishers. I don't know if Merge are looking for investment, but they're a publisher based around here. Team 17 have basically become the biggest UK publisher, and they really want to, so I'm going on a bit, but this is, I think, quite interesting. Team 17, based in Wakefield and corporate office in Nottingham, run by Debbie Bestwick, who they went public in March. This is what's interesting to investors. They went public in March 2018. I've got the stats. I want to tell you the stats because I find this amazing. So Team 17 launched share price at £1.65 in March 2018 with a market cap of 217 million. As of today, the share price is £4.65 with a market cap of 611 million. So they've tripled in size in market cap in 21 months. And basically, I wish I'd invested in them. We're all going, oh, anyway, everyone, like, we've had this conversation, Matt was talking about it earlier, where like everyone's going, I wish I'd invested.
But all the companies, there's been four companies that UK floated in the last 2 or 3 years. They've all Curve got investment.
Curve.
So absolutely.
Sumo, who are more of a development company, they've gone from 145 million to 292 million in a similar time period. TT Games, which we mentioned, got sold to Warner Brothers in 2007 for 120 million. So there's a lot of money to be made, and it's not in any way London-centric.
Absolutely, that's a really good point about local success stories. Thank you, Andrew.
Last week at the fantastic Creative Scale-Up event, there was a panel, a presentation, and one of the slides showed sort of total investment breakdowns in the country by category, and right at the bottom was gaming with 3%. And this was framed as a bad thing. I view that as the best thing ever, and I've been exhilarated and hyped ever since, because the top of that list is, fintech, 25% of investment going in there. Well, that's elbows bumping into each other. That's not new opportunity. That isn't fertile ground. 3% in gaming, and the fact that Manchester has not just established huge developers, which are constantly spinning out people who then go and form their own companies, but lots of homegrown talent and whatnot doing amazing things. So that's the thing that's got me really excited, is that there is nothing but room for growth.
Absolutely, that's a really great point. Stephen?
I think it's worth kind of mentioning the ecosystem of making games includes a lot of companies that service these developers and publishers as well. So you've got people who just do work for hire, so studios will just do somebody else's IP and take that and make those games. But you've got video companies, you've got marketing companies, marketing freelancers, and you've got this whole art outsourcers. So you've got a whole. I think there's a whole slew of kind of investment opportunities in that sector as well. So it's the companies that are providing, translation services, QA services. It's a big industry and it needs a lot of outsourcing.
Yeah,
so
absolutely.
That's there.
Daniel?
I'm probably going to repeat what the others said, but it's been said before. It's just an industry that's growing massively. More and more people are playing games. The opportunity, we've given a sort of flavour about the different points you can invest in, and every one of those points, whether that's really modest angel investing right up to publicly floated businesses, the success stories all the way through, where they're publishing games that have been published, publishers themselves, the whole ecosystem is like esports mentioned earlier. There are massive opportunities there. I mean, it does take a little bit of unpicking. You do need to have a bit of knowledge about the sector. I think that's why we need to keep these conversations going. But across the board, there are success stories there. So lots of opportunity.
And lastly, Nick?
For investors, I would recommend that they really research the sector. It's fairly new. It's full of trends. There are historical sort of life cycles of hardware. So it's all right. I'm not here.
I'll answer.
So, for instance, we're just coming to the end of the life cycles of the current Xbox and PlayStation machines. So you'd be foolish to invest in, if you've got a blockbuster game, fine. This Christmas will be probably your last hurrah. But equally, holiday season's going to see the new hardware coming out. You need to be looking at getting onto those platforms and getting them on early while you've still got, while the marketplace is still quite small.
It's not cluttered.
Yeah, it's not cluttered. If any of you've got a mobile phone, you'll know that the respective stores for that how many new apps they get every day is scary, and it's getting worse and worse as well on the PlayStation Store, the Xbox Store. Nintendo originally kind of used publishers like us to aggregate content. They just opened the floodgates. Anybody can get on. It's a race to the bottom with many developers who put games on for 99p. Nothing wrong with putting on for 99p if you can sell stacks of them and get the quality, that's great, but it's a race to the bottom. So do your research of who you're investing in, what you're investing in, and what the current market trends are now, but in 2 years' time, because a game doesn't happen overnight, it happens in a couple of years' time. So a lot of due diligence is needed for investors. Do it right, and there are, as Simon pointed out, there are huge scale opportunities, and then with smaller angel sort of funding, smaller scale, but the opportunities are there, but due diligence is definitely going to be.
And come and ask us about it, Will. We don't talk enough about it, do we, really?
Thanks for watching our second Creative Scale Up video, Invest in Game. Don't forget to subscribe so that you don't miss out on the next video in the series.
This programme is fully funded by the Department for Digital, Culture, Media and Sport. I would like to say a huge thank you to our partners and sponsors, and encouraging you to go and check them out on our website. Thanks for listening, and we look forward to seeing you next time.